What's going on, you guys? My name is Zach Hartley, and in this video I want to share with you two high growth stocks that I'm planning to buy into over the next few weeks. Here is everything you need to know. Let's go. Okay, so before we dive in, let's just do a quick recap on the last time that I made a video like this. It came out on June 12th, 2021. Here is what the thumbnail looked like, and the first company that I mentioned was Mercado Libre. At the time, it was trading at $1,316. This is just a screenshot from the video, and today it is trading at over $1,900, and it's up 44% since June 12th. So it's doing extremely well. The second company that I pointed out to you was a company called C Limited, ticker symbol SE, and it was trading at $263 when I filmed that first video. It's currently trading at $343 as I take this screenshot, up over 30% since June 12th. So we are doing extremely well. I currently hold a position in both companies, and I'm very happy with the results. Now, the companies that I want to share with you today are Coursera and LICY. Now, I'm going to walk you through who the companies are, what they do, why I like them, as well as the stock chart. So stay till the end, and I promise you'll get some value out of this video. Now, let's start with the first company here. This is Coursera, and they're a very simple company. They host a platform that is designed for online learning for higher education. So basically, anything past high school, whether it's university or some type of skill-specific training, you can probably find it on Coursera. Now, one of the things that makes Coursera unique, and what I like about them, is that they work with universities and other organizations to offer this online education and this online learning. So they're actually offering certificates and even degrees through their platform, which is very unique and a little bit different than a lot of the other online course platforms. I personally use Skillshare a lot. That's the platform that I promote, and unfortunately I just wouldn't be able to list my courses on Coursera. So it's a little bit different platform. It's mostly focused on organizations and universities that have a reputation that can offer these courses with some certifications or credentials behind it. Now, why do I like this company? Well, it's really simple. Online courses are becoming more popular and more valuable. If you want to learn something, you can almost guarantee that you can find it in some type of online course that you go in and pay for, and you can absorb that education and absorb that knowledge completely through your computer. There's almost nothing these days that you can't do through your computer unless it's a hands-on skill. Let's say you're trying to learn how to be a nurse and put an IV into somebody's arm. You need to do that in person. But if it's anything to do with accounting, finance, computers, everything can be done online, which is really nice, and it also makes things very, very scalable. Everything about this business is hosted on an online platform that can be sent out and can be accessed by anybody across the world, which is really, really remarkable. It's amazing, and it means that the target audience or the market for their products is absolutely massive. And not only are they going after people that are coming up through high school and then looking for new skills or through online education, but they are also getting this platform out there to developing areas of the world that didn't have access to internet before. And the more people that continue to have access to it will now be able to access Coursera, which I think just broadens their market, and it gives them a massive opportunity. Now, the last two reasons that I really like this company is because it is good for the world. The more education and the better and smarter people that we can get out into this world, the better it is for everyone. And this company also has excellent margins, which we are going to dive into right away. Now, the revenue for this company is very exciting. They're currently doing about $102 million in Q2 of 2021. If you extend that out, it should be about $400 million for the year. We again are going to take a look at that in just one second. But $62 million of their revenue comes from consumers, and that's growing by 23% year over year. $28 million comes from enterprise, and that number is growing by 69% year over year. And the degree section of their business is growing at 78% year over year, and it's bringing in $11.9 million. And this actually has 100% gross profit margins, which is really nice. And the other two sections of their business are hovering around 66 and 67% gross profit margins, which is absolutely phenomenal. And this means that the company is not only growing extremely fast, but they're also making a lot of money on all of that incremental revenue, which is exactly what I like to see. Now, when it comes to the forecast for this year, what they are forecasting for fiscal year 2021 is $402 to $410 million for the year. Now, when you look at the company as a whole, the market cap for this company is currently $5.47 billion. So they have a market cap of 5.47. They're planning to bring in $410 million in fiscal year 2021. That would give them a price to sales ratio of 13.2, and their growth rate over the last 2 years was 59% from 2019 to 2020, 39% from 2020 to 21, which in my mind is absolutely fantastic. This is a company that is growing at roughly 40% year over year, has remarkable internal growth in their different business units, has fantastic gross profit margins, and I think they're selling at a discount here at 13.2 times their price to sales. This company is going to continue to grow for the next 3 to 5 years. This gross profit, I think, is actually going to continue to go up, and 5 to 10 years from now, Coursera is going to be an absolute cash cow. So I am watching this one extremely closely, because when you look at the stock chart, it's very exciting. We've got some major technical support here right between $32 and $35. I didn't update this chart, but it actually went up by 4% today, so I think it's actually trading around $36 or $37 as I film this video, but it is doing extremely well. And the reason that I'm watching this so close is we have a low established at $32 right here, but if you look at the price chart over the last sort of month right here, you can see a triple bottom right here at the beginning of August, the middle of August here, and the middle of September. We have got a triple bottom right here. It's starting to move up, and I think this just represents a great opportunity to get into a very quickly growing company that has established support, that has excellent margins, and that is doing extremely well. So as of right now, stock's down 45% from the highs. I think it's trading at a discount, and I plan to build into this stock over the next few weeks. Now, before we dive into the next company that I want to bring to you, LICY, I just want to mention my Discord chat, because this is where I share all of my trades and all of my analysis. So if you have any interest in seeing when I get in and out of a position, or how I look at a chart, or you want to ask me any questions, definitely consider signing up for my Discord chat. It is a community of traders that I'm trying to build so that you don't have to sit at home alone all day. You can come and join the community here on Discord. I will try and support you as much as I can and answer any of your questions, and then you have access to everybody else to help you out as well. You can look at their due diligence, look at their analysis, and see what other people are trading. It should help you out, and it's only $5 per month. The link is down below. Now, the second company that I want to talk about in this video is actually very exciting, and I think long term this one just has huge potential, but only if they can execute. And this company is called LICY. Now, what they do is they recycle lithium ion batteries. They turn these old batteries and scrap battery materials into usable raw ingredients for new battery manufacturing. And I think this is very exciting, and I like it because battery usage and battery demand is absolutely skyrocketing right now, largely due to electric vehicles and the demand for electric storage. Now, what's nice about this, and what's really advantageous to this recycling company, is that this increased demand for batteries not only means that they're going to have more batteries to recycle, but it also means that there's going to be a higher demand for the output from those batteries, making their business model more valuable on both sides as time goes on. Now, the X factor here is, can they be the major player in the industry? Can they be the largest player in the industry? And can they kind of get a stranglehold before anybody else comes in? So far, it looks like they're doing that. So far, it looks like they're the biggest in the industry. And so far, it looks like that's probably the path forward, which is why I'm so focused on these guys. Now, the second reason I like them is that it's very good for the environment. These lithium ion batteries have a lot of environmental concerns, and the ability to recycle them kind of mitigates a lot of those concerns, and it really helps out the supply chain as well. The next reason that I like this company is because they're already operational. They are bringing in revenue. They have facilities. They're recycling batteries. This isn't a guess. This isn't a technology. This isn't in development. They are currently operating, and they're in the scaling mode, which is very nice to see. They also claim to have about a 95% recovery rate for the products that are going into the ability to recover them and separate them and sell them on the back end. They say that they can recover about 95%, which in my mind is absolutely amazing, absolutely phenomenal, and I'd really like to see them prove that in the numbers. I haven't seen that proof yet, but I do think you can trust these guys, and that would just be absolutely amazing. I also think that the market for recycling lithium ion batteries and getting those raw materials and selling them back to the manufacturers, that market is going to explode over the next 10 to 20 years. And I think this company is very well positioned very early on to take advantage of that. Now, their revenue, they do have revenue, like I said, and it's growing extremely fast. So as you can see here, product sales and recycling services totaled $1.7 million for the 3 months ended July 31st. If you compared that to the same period of last year, they only brought in $181,000. So their revenue is up about 1,400%, which is absolutely amazing. Now, granted, this this isn't a ton of revenue for the market cap of the company. However, what you're buying into here when you buy LICY is the potential and the market opportunity in the future and how well this company is positioned to take advantage of that market opportunity. What's really nice to see though from an investor standpoint, looking at this income statement, is that this growth is very, very, very appealing. As you can see though, they did lose about $6 million from operations, so they're not anywhere near profitable yet. This is a company that is scaling up extremely fast right now. They are bringing on investment, they're investing it into their facilities, and 5-10 years down from the road from now, when they have a stranglehold on the lithium ion recycling market, that's when they're going to be generating a profit, but they will not be there, at least for the next little while as far as I can tell. Now when it comes to the balance sheet, it's a little bit tricky to read here because this was actually a SPAC. So LICY actually merged with a SPAC, that's how they became public, and in that transaction they're actually getting an infusion of about $600 million. So a massive capital infusion is going into this company. So when it comes to the assets, it's a little bit tough to read here. None of these numbers are super accurate right now, but what I did want to point out was the liabilities. They have a total of about $47 million worth of liabilities, but they are now going to have about $600 million worth of assets on the balance sheet. So the balance sheet now looks extremely healthy, and as of the last quarter, they're only burning about $7 million per quarter. So this company now has a ton of runway, a ton of capital, and all they need to do is execute. Now, when it comes to execution, you do have to understand their operations. They're going with what they call a hub and spoke model, where they have one major facility in Rochester, New York, that is going to be processing all of the material into the final ingredients. And then they also have a couple of spokes around the country that are going to be accepting those raw ingredients and doing some initial processing on it. So it is going to be kind of one main facility and then a couple of collection facilities around the country. They do currently have an operating facility in Ontario that kind of feels like it's at this pilot size or pilot phase, but the mega hub in Rochester is being constructed right now. That is where all of the kind of final processing will take place. They're also building a spoke in Arizona, and just a day or two ago, they announced a new spoke in Alabama. So they're growing extremely quickly, and they're really starting to expand that operational footprint. Now, when it comes to highlights from the last quarter, they did extremely well. They added 14 new battery supply customers. They also signed a deal with Ultium Cells, which is a basically partnership between two giant companies, so really nice there. They also generated 524 pounds of black mass, and so that is basically what then gets refined into those final ingredients. And within that 524 tons, they expect to generate 85 tons of lithium carbonate, 75 tons of nickel, and 23 tons of cobalt, which means they can then sell those materials back to the battery manufacturers, and it's a nice little closed loop system, and it makes their value proposition and their technology and their systems extremely valuable, and that is why I'm so excited about this company. Now, when we look at the stock chart, we have to understand that these guys just IPO'd back in August, so unfortunately, if you pull this up on Questrade, which is the platform I use, you can only see the charts dating back till August 12th, and at that point, it actually started at $11.89, and it has fallen all the way down to $7.69. Now, if you know anything about SPACs, you know that most of these deals go through at $10, and so when you see a SPAC deal like this trading below $10, it means that the market has discounted it compared to what the investors thought this company was going to be worth. And in my mind, that represents an opportunity, because I still think the market opportunity for this company is absolutely massive. I like the technology, I like what they're doing, and the fact that everybody else has sold out of a really good company, I think for me represents a buying opportunity. And so what I am watching for is I want to see support established. I want to see a very clear level where people keep buying it up and they're stepping in and they're supporting the price. And it looks like we might have that right around this sort of $7.50 to $8 range. As you can see, the price has not fallen below this sort of $7.69 level right here at the end of August, and we've got the exact same thing happening right now. So if we see LICY start to move higher, we see a bounce off $8, and we see this stock start to go to $8.50 and $9, that's when I'm going to be buying back in. I'm going to be buying in for the long term. I'll probably put it in my TFSA, and I'll be able to save all of the capital gains. But that is how I feel about this company right now. I'm not buying in yet. I'm waiting for confirmation for a bounce off $8. If it falls down to $7.50 and $7, I might start to pick up a small position, because I really like the company long term, but I am going to wait until we have confirmation. Now, if you are interested in learning a little bit more about how to analyze these companies, look at the stock chart and read the financials, then you should definitely consider signing up for my Stock Market Fundamentals course. It is completely free and it's hosted on Skillshare. All you have to do is sign up with the link in the description to this video and you will get 2 weeks of free access to the platform. After that, cancel your subscription and it won't cost you a single thing. You will have got the entire course for free, and there's over 9 hours of content in the course. Over 8,000 students have gone through the course and over 300 of them have written reviews for you to read. I promise you, it'll be the best free resource that you can find online, and the link is in the description down below. Now, that's it for this video. If you got any value out of this, remember to click that like and subscribe button. I sincerely appreciate it. Thank you guys for watching my videos. It means the world to me, and I will see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.